Hi all, this is Ashish Jal here. Welcome again to Elliott Web News channel by wavestrategy.com. And I'm sure I'm going to be talking about right now with respect to time cycles, a subject which is largely ignored by major participants, and no one pays any heed to time cycle as such. But timing the market is the key, because even if you have a right position and you are not able to time it well with respect to the exit, you'll end up losing on that position. Even if you are right in the overall direction of the market, but you are off even by a day, then you might end up losing because your stop loss will get triggered and the market will then reverse back on the upside. So analyzing time cycle is very, very important if you want to analyze the markets. If you are not able to understand time cycles in depth and you are not able to apply it correctly, then you might end up doing some wrong analysis. So ensure that by just doing time cycles for a few days, you are not going to become an expert over that. You will have to spend some time with time cycles in order to start applying it correctly. I'm going to discuss about the current time cycle of around 54 and 55 days on Nifty, which I have been following for many, many years, and it has worked out wonderfully well in order to time the markets. As well as I combine these time cycles together in order to understand what is the overall chart pattern. If you look at the Elliott wave or the new wave counts. So most of the time I practice neo wave analysis, and it helps me to understand what kind of pattern Nifty is overall forming, and what do I expect the outcome to be. If the time cycle is close by, whether if it is going to bottom out soon, then I know that this is the time where I need to get cautious and I need to start looking for buying opportunities once the resistance levels are taken out. So that is very, very important. Time can be very dynamic. It's going to be like you can be off by a few days plus or minus, and that's why you need to get price confirmation as well. And but time cycle will give you a perspective on what is the range from where you have to start picking up the trades, what is the range where you have to start looking for buying opportunities, and neo wave will tell you which level you have to look at, and break of that level is going to provide the confirmation. So you have a classic combination of both time and price, and this is exactly what I have discussed in the last training on my 6th and 7th April, where I talked about how to look at time and price combined together. So NeoWave has a very, very strong, powerful forecasting tool for price, and Hurst time cycle is a powerful forecasting tool for time. And that gives a lethal combination. If you want to do a positional trade, that's the best combination. And especially if you are trading options, this gives a very, very strong insight. Let us try and see what is happening with the ongoing time cycle right now. With respect to prices and time, we are going to combine the patterns on new wave as well as the time cycle. If you can see the Nifty chart here, I'm showing the blank chart. So many times I keep getting the question, where do we start the counting on the neo wave plot or the Elliott wave plot? The first thing after seeing the chart I do is to plot a channel. How do you plot a channel? You draw a trend line on the bottom, and you look at this trend line, draw a thick line, and draw parallel to this trend line on the upside. So you get a range where we are right now. So if you look at it, prices broke above this range, and it is retesting this trend line on the downside. So the important level which I am getting as of just looking at the channel is, this is a very, very important support zone, I would say. So this becomes a support zone on the downside, and on the upside the resistance zone is definitely this. So this resistance zone is no brainer. Everyone is tracking that level of 11,760 on the upside, and this is the zone where we are seeing a consolidation happening. Now, if you have to look at the overall pattern analysis, if you do, there are two possible variations. One of the variations that I'm looking at is the prices started trending from this level, or over here. Let me draw it. The trend started over here and not at the bottom, is one of the possibilities. The reason being, we started seeing a sharp up move from here, which is that the last falling segment, which was this correction, was retraced back faster at this point of time. Because the correction was retraced back faster over here, the start of the count will be from this point, which is what I am considering. Now the entire move on the upside over here can be considered as way. This is one of the possibilities I am talking. There is another possibility of an impulse which I have shown in the daily research report, but an alternative possibility of a diametric pattern, which I'm talking right now. This is wave B, which is completed at the bottom. We have move on the upside is wave C. The reason why I'm saying that we completed wave B in the form of a diametric pattern, I'm not sure if you are aware about diametric pattern. It's a 7-leg correction. You can visit wavestrategy.com to understand diametric pattern in more detail. You can Google out wave strategy and search for diametric pattern on our website. I've explained it there in much detail. You can look at wave A completed, wave B on the downside, and wave C, which is completed at the top. Post that, we are seeing wave D formation, and this is looking like a running bow tie diametric pattern, which is meaning that we have a contraction and then we should start seeing an expansion. So that's one of the possible counts that I'm seeing right now, and this is how the entire move looks like. So we completed A, B, and C at the top, and what we are witnessing is right now wave D formation. Since past 10 days, we have not gone anywhere else. So that's the new wave pattern I'm looking at right now. But if you combine the time cycles, try to understand, cycles will not give you the exact date when the low is formed. Many of you might try to think I'm trying to fit a cycle, but trust me, I have seen years and years of cycle and multiple cycles across different types of studies, and I know what I'm doing. So this is not fitting the cycle, but this is going by looking at the past, which cycle worked out very well, and based on that, I'm trying to analyze it. So this is a cycle that I use, which is a 55-day cycle. And after a top being formed, we are seeing a very clear topping formation which happened here, and then we are seeing a correction in the form of sideways action rather than price correction. So this is more of time correction, and the reason for this time correction is because the cycles have been in the topping phase. That's one. Next, whenever there is a very sharp fall, the cycle tends to contract. That's why you will see a low being formed before the 55 days itself. Whenever there is a distribution or accumulation and sideways consolidation, that cycle tends to expand, and that's why we see more than 55 days is what is consumed over here on the chart. If you look at it, that's why we are having a contraction of the cycle and an expansion of the cycle, which is in sync with my outcome of that the 55-day cycle is still very much valid and is working extremely well, and that is suggesting that there are still few more days, and post that we should be bottoming out as per the cycle analysis. I'm keeping a close watch on the important support levels, because if the important support levels are broken, there can be some sudden declines and we form a panic low and bottom out. Or I'm keeping a watch on the important resistance levels, and based on these resistance levels, I'm going to see how it's going to behave once the resistance levels are taken out. So this is how I am looking at the cycle analysis, and that's how you have to do it. There are various studies. If you combine cycles, you can use a D-trended price oscillator, which will give you an interpretation of a cycle in a much better way. You can use a centered moving average concept, which will help you to identify the cycle time periodicity. And always remember, at any point of time, there are multiple cycles acting on the price. It's not just one cycle that I'm talking about right now. This is just for your reference, just from learning perspective, but there are multiple cycles that acts on the price. And looking at this overall cycles, it is very much sensible to assume that we are in wave B, and there is going to be one push in the form of wave E, and F and G is going to be pending, which is going to keep driving Nifty at a higher level, provided the resistance level breaks. You don't jump in exactly when I say that you have the trend is going to about to reverse, maybe on the upside, but you need to wait and see those levels to be taken out also in faster time. The problem is people understand only half of the things, and then they start saying it didn't work without even analyzing how it should be applied in totality. To understand those concepts in a very, very clear way, what I would suggest is you have to understand the entire application of cycle analysis. Along with that, you will have to look at price movement as per neo wave pattern. If it is impulsive, what is forming next? If it is corrective, what do we expect next? You should always have an alternate scenarios in place when you are forecasting, because you need to be prepared that there is an 80% probability this is how it should play out, but there is always a 20% risk which will tell you, okay, this is not the scenario that we are looking at right now. So there are chances, there are times when I'm 95% sure this is the scenario which should play out, and there are times when I'm not sure which pattern is going to be forming. So currently we are again entering into a phase of very high predictability. I think next few days is going to be very, very crucial, and we have entered into our election month. It's going to be volatile. It's going to be sharp moves. You need to use a stop loss strictly as per the technical analysis, not randomly, and trade based on these methods that I'm talking about. You'll get detailed analysis of these methods in the daily research report, the financial wheels, short-term update on Nifty, Bank Nifty stocks. You can try intraday advisory, which we provide. You can get access to the momentum research report, where we expect 5 to 10% move on the stocks as the Nifty bottom out. Or you can also build your portfolio of multi-bagger stocks over the period of 2 years, because those are the stocks that will outperform when the next leg on the upside starts. But it has to be done in staggered fashion, in a systematic fashion. There is no rocket science here, but there is a systematic risk that if you are willing to take, you might be rewarded eventually. That's it from my side. Thank you very much, and see you again same time next week. The webinar will be available also on the website wavestrategy.com. You can contact me directly on 999204 22202, or call or write to us at helpdesk@wavestrategy.com. That's it. Thank you from my side, and have a wonderful weekend.